In this episode, I will break down the key areas where most traders get stuck. If you're getting stopped out just before the market moves in your favor, or if you find yourself confused while choosing between multiple PD arrays, then this video is exactly for you. So let's dive straight into it. So basically what I'm trying to say is this. Most traders, especially beginners, and even traders who have been studying ICT for some time, already know the basics. They know how to identify liquidity sweeps, they know what liquidity is, and they know that after a liquidity sweep, they are supposed to look for an entry. That part is not the problem. The real problem starts when you go deeper into ICT concepts. When you dive deeper, you start learning about many different PD arrays and many different entry confirmations that ICT talks about. You learn about fair value gaps, inverse fair value gaps, order blocks, breaker blocks, and other PD arrays that can all be used as entry points. And this is where most traders get confused. After a liquidity sweep, when you zoom into the chart looking for an entry, you almost never get just one PD array. Most of the time, you get multiple PD arrays forming one after another. You might see a fair value gap. You might see an order block. You might see another fair value gap form after that. All of these PD arrays start inviting you to enter. You might enter on the first one. You might enter on the biggest one. You might enter on the most recent one. And this happens in almost every trade you take. But this is not how you are supposed to choose where to place your trade. There's a proper mechanical way to decide which PD array to use, and most traders don't follow that process. Because of this, traders start doubting themselves. You start asking questions in your head like, should I even place a trade here? Should I enter on this PD array or wait for the next one? Or should I avoid this trade completely? And the moment these thoughts start coming into your mind while trading, that is when things usually go wrong. That hesitation, that confusion, and that second guessing is what causes bad entries, early exits, or missed trades. What I want you to understand is that you don't need to be confused while selecting a PD array. You don't need to guess. You don't need to rely on emotions. There is a very clear and mechanical way to decide which PD array to trade from, depending on the situation and the context. And once you understand that process, all of this confusion disappears. You won't be questioning yourself every time you see multiple PD arrays on the chart. So now, let's move on and talk about the exact things we are going to use to become better and more confident at placing trades and choosing the right PD array every time. So after a liquidity sweep, this is usually the point where most traders get confused. They know liquidity has been taken, but they don't clearly know what to do next. The first thing you need to understand is that the market never repeats the exact same structure every single time. It may show similar characteristics, but you will never see the exact same thing happening at the exact same point again. Because of that, you need to become an observer, not someone who expects the market to behave in a fixed way. After a liquidity sweep, it is not always going to be the same PD array, and it is not always going to be just one PD array. Sometimes it can be two, sometimes more than two, but not every single time. That is why observation is very important. Now let's talk about what actually happens at the time of a liquidity sweep. There are two things that usually happen. The first thing is manipulation. The second thing is the deciding leg, which we also call the displacement leg. Whenever you see a liquidity sweep that is valid for a reversal, you will always see both a manipulation leg and a displacement leg. Now let me explain what a manipulation leg looks like. In this example, we have a sell-side liquidity sweep. At every sell-side liquidity sweep that is valid for a reversal, the manipulation leg will start from the left side of the point where liquidity is swept. So in this example, this is the exact point where the low gets swept. Now what we do is look to the left of that point. We ask a simple question. Which swing high was formed before this liquidity sweep, and which leg from that swing high actually took the sell-side liquidity? Here, you can clearly see that we have this swing high. After this high is formed, price moves straight down and takes the sell-side liquidity. So this leg, starting from that swing high and ending at the liquidity sweep, is the leg we care about. That leg is what we call the manipulation leg. Now we mark the high and the low of this leg. We do not care about other small legs that may form below it after the sweep. Price may form more legs. It may even take more lows on lower time frames, but we do not focus on those unless we are specifically trading lower time frame liquidity. If your plan is to trade after the main liquidity sweep, then you only focus on the leg that actually took that liquidity. So whichever liquidity sweep you are considering as your main sweep, you always mark the leg that caused that sweep. That leg is always your manipulation leg. Once you clearly identify this manipulation leg, everything else that comes next becomes much easier to understand. Now that you know how to identify the manipulation leg, we can move on to what happens next, which is the displacement leg and how that helps us decide which PD array to use. Now let's talk about the displacement leg. Just like the manipulation leg forms on the left side of the liquidity sweep, the displacement leg will always form on the right side of the liquidity sweep. Once you understand which side the displacement leg appears on, it becomes much easier to identify it correctly. So now let me explain what exactly the displacement leg is. The displacement leg is the leg that gives us confirmation that price is actually ready to reverse. This is the leg that shows intent. This is the leg that tells us the manipulation phase is over and the real move is starting. Now, one important thing to understand is that the displacement leg can look slightly different for different traders. This depends on how you personally trade and what confirmation you trust the most. Some traders use inverse fair value gaps as their confirmation. Some traders use a change in state of delivery. Some traders use a market structure shift. All of these are valid, but the displacement leg must be marked according to the confirmation you actually use for your entries. You should never mix confirmations. For example, if you believe in market structure shifts for confirmation, then your displacement leg should be defined by that market structure shift. For me personally, I trust market structure shifts the most because they give strong and clear confirmation of intent. So in my case, the displacement leg starts from the point where the market structure shift begins and ends, where that impulsive move completes. In this example, you can clearly see that price gives us a market structure shift after the liquidity sweep. Now what I do is mark the low from where this market structure shift starts, and then I mark the high where that impulsive move ends. The entire move between that low and that high is what I call the displacement leg. This displacement leg is very important because it tells us where price showed strength, speed, and intent after the liquidity sweep. Once you clearly identify both the manipulation leg and the displacement leg, choosing the correct PD array becomes much more mechanical and much less confusing. Now that you understand what the displacement leg is and how to mark it, the next step is learning how to use these two legs together to decide which PD array to trade from and which ones to ignore. So, now let me explain how you are actually going to use all of these concepts to find the best entries. There are basically two ways you can approach this, and both of them are completely fine. It just depends on how simple or flexible you want your trading to be. The first way is keeping things very simple and mechanical. Some traders like to stick with just one PD array. For example, some people only trade inverse fair value gaps, some only trade order blocks, some only trade breaker blocks. If you are someone like that, you don't need to complicate anything. You can pick the PD array you trust the most and use that same PD array for every single entry. As long as your context is correct, this approach works perfectly fine. The second way is a little more flexible and more adaptive to market conditions. In this approach, instead of forcing one PD array on every trade, you choose the PD array that is best suited for that specific market condition. And this is where the manipulation leg and displacement leg become very useful. Once you have identified your manipulation leg and your displacement leg, the next step is to mark out the premium and discount of the displacement leg. After that, you simply observe which PD arrays are forming around the 50% of that range. Whatever PD array exists closest to the 50% level of the displacement leg is usually the best and most balanced entry point. There is nothing complicated here. You don't need to guess. You don't need to overthink. You just enter at the PD array that aligns with that 50% level. Now, there is one more important point for traders who use market structure shift as their main confirmation. If you use market structure shift for your entries, then you can directly use the PD array that forms right at the market structure shift itself. For example, in this scenario, you can clearly see that we have both an inverse fair value gap and a normal fair value gap forming exactly at the point of the market structure shift. That gives very strong confluence. In this case, I can comfortably place my order at either of these PD arrays without hesitation. Now notice something important. Below this displacement leg, you might see other PD arrays like order blocks or breaker blocks that price has not tapped into. But those are not the PD arrays we want to use for entries in this situation. We only want to enter at the PD arrays that are aligned with either the market structure shift or the 50% level of the displacement leg. And if you look carefully, you'll notice that the fair value gap also aligns very closely with that 50% level of the displacement leg. That alignment is what gives you confidence. So this is how you are going to place your trades. You either stay consistent with one PD array that you trust, or you become flexible and let the displacement leg guide you to the best PD array for that specific setup. Once you do this consistently, choosing entries becomes mechanical, calm, and free from confusion. I hope this helped you clearly understand how to use manipulation and displacement legs to choose the right PD array without confusion. The whole goal of this approach is to remove hesitation from your trading. You don't need to guess, and you don't need to jump between levels. When you understand where manipulation ends and where displacement begins, the best entry usually becomes very obvious. Keep things simple, stay consistent with your rules, and let the market come to your levels instead of chasing price. If you found this video helpful, make sure to like the video and subscribe to the channel. If you want to connect with me, you can join my Telegram and Discord. The links are in the description. And if you want to learn personally from me, you can check out the mentorship program. The link is also in the description. That's it for this video. I'll see you in the next one.